concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Here to get the spoken word now on this stock market rally that we are witnessing, John Blank, our Chief Equity Strategist, joining me via Skype from the West Coast. John, now that the presidential election is in the rear view mirror, we have one heck of a stock market rally and market rotation going on. What is driving it?
Well, Terry, to be very clear about this, when a party takes power, the followers of that party get very optimistic. And we saw this with the Democrats for 8 years with Obama, that the optimism amongst Democrats was much higher than Republicans and grew as the 8 years passed. So suddenly we had a surprise result, and the Republicans took control of the Senate, the House, and the presidency. So that was a sweep for the Republicans. So we're seeing just an incredibly ebullient Republican optimism that's, broadly speaking, sweeping up all stock indexes, U.S. and non-U.S.
But this is actually bringing the retail investor back to the bullish camp, right?
That is true, Terry. As you know, at Zacks, we've been seeing subscriber ads, quite substantially after the election. Everybody's getting bullish. And this is what it is. It's just pure optimism. It's pure Trump optimism. There is no policies that are in place till January the 20th. So what this is just run with the bulls, and there's really no reason that it's going to stop anytime until January. And then in January, even then, it can carry on. So
we'll probably see that Santa-Trump rally between now and year's end, right?
That's the thinking. The worry you have here, Terry, and reason that I would tell some people to take some profits on their bigger holdings, particularly the really large cap ones that have run up a lot, is that once valuations gets rich, the smart money takes some profits and rotates out of things. And that's the other thing to be concerned with here is rotation, which is sell the high PE, high value stocks with a lot of profits in them and rotate into stuff that's been beaten up.
You want to make a call, go out on a limb, tell us where you think the S&P 500 might end the year?
Yeah, Terry, I'm looking at 2250 in the S&P 500. I know that's about 50 points from where we are today. I think that we can get there.
All right. Well, in your market strategy, though, for November, you do mention that there is an implication that a bear market may hit well into 2018, but everything should be copacetic between now and then?
Well, Terry, here's the thing. Typical bear markets hit the second year of presidential terms. That's on average. And averages are a terrible way to run your life because there's never going to be an average event. So what that tells you is that there's going to be a bear market in either 2017, 2018, or 2019, but that this presidency and this market is going to roll over here in the next 2 to 3 years. You just got to be aware of that this thing will end, and the history tells us it's going to end 2 years from now on average.
All right. Well, in the meantime, while we're enjoying what we're seeing in the market here, you're talking about 3 sectors leading the way.
Yeah, Terry, Alliance Holdings is a stock I like. It's a coal, steam coal producer. This is getting a Trump bid. It actually was rising before the Trump elections because people are getting very bullish on the coal mining sector and the rise in prices of materials generally. So I like that sector. The other one I like, oddly enough, is a company in Australia, Fortescue, which is a miner. It mines a lot of things in Australia. And ironically, as the interest rates rise in the United States from the Fed and from the idea that Trump's going to do a lot of spending, infrastructure spending, that this drives up the dollar. The dollar's at a 13-year high, which takes the renminbi down. So the renminbi's been depreciating, which is putting a bid on Australian mining companies. So you want to take a look at Australian mining companies like Fortescue. And the third one I want to point out to people, and this is it's really odd when you think about it, but the inconsistencies of the sectors is just something to be aware of. But the other one that's going up is the big banks. They're getting a bid. They were beaten up, and they're getting a rising interest rate that's improving their margins. So Bank of New York Mellon, ticker BK. I like it. It's at Zacks #1 rank. It's another area to look into is a large banks like that.
All right, so we're talking materials, energy, and financials, right?
That's correct. That's what I like. Materials, energy on the oil prices, and coal, and some of those types of things. Stay away from the alternatives like solar, and then take a look at the big banks.
All right, John, thanks for that. There you have it, the latest word on the stock market here, and some sectors and stocks thrown in for good measure. With John Blank, I'm Terry Ruffalo.